Hi, I'm Chris Visser with the January Commercial Vehicle Market Update. This month we'll look at 2013 versus 2012 and discuss changes in market dynamics for different segments. Starting with sleeper tractors, 2013 performed more strongly than 2012 overall, making this year the strongest in recent history. Trucks retailed in 2013 brought an average of 5.9% more money. The main reason for this improvement is the increased number of 3 to 5-year-old trucks available to the marketplace. Through mid-2013, the 2007 model year dominated sales in the used market, since that was the last year to feature non-DPF emissions and was also the last year to be built in high volumes prior to the recession. Around mid-year, supply of lower mileage 2007s dried up, resulting in a more balanced supply. Currently, the most common sleeper tractor retailed is 5 years old, which is 1 full year younger than this time last year. Fleets and other users are also returning to more traditional 3 to 5 year trade-in cycles, resulting in greater numbers of newer trucks available. Over the course of the upcoming year, we expect mildly increased numbers of lower mileage trucks to hit the market, potentially placing mild downward pressure on selling prices. Overall, though, demand for low mileage trucks will keep pricing at historically high levels. On the wholesale side, 2013 performed moderately worse than 2012, with the average sleeper tractor bringing 14.6% less money. This difference is partly due to the higher average mileage of trucks sold through this channel. Volume in 2013 was higher than 2012, but still not back to pre-recession levels. The majority of trucks sold wholesale have over 600,000 miles, which is a cohort with lukewarm demand. A somewhat greater volume of lower mileage trucks should become available throughout 2014, so we expect wholesale pricing to remain flat to mildly downward. Looking at the construction segment, pricing trended mildly downwards over the past 24 months, although volume was notably higher in 2013. The newest model years saw a mild to moderate increase in pricing starting in mid-2013, and all model years increased in November. Looking ahead, this segment is linked to residential and commercial construction, state and federal infrastructure projects, mining, and the petroleum industry. While mining and petroleum have been strong, traditional construction infrastructure will need to ramp up more notably before this segment sees an uptick across the board. In terms of overall sales volume, dealers sold a similar number of trucks in 2013 as in 2012, although there was much more variation month over month in late 2013. Possible explanations for this volatility include federal budgetary dysfunction in the third and fourth quarter, severe weather, and questions about Section 179 tax benefits. There's not one single smoking gun, so we attribute the volatility to a combination of all these factors. Looking ahead, incoming 2012 models should mildly satiate demand for low mileage sleeper tractors, placing mild downward pressure on the newest used trucks. Any increase in construction expenditures in the public and private sectors will support the construction segment. Economic conditions will continue to improve, likely assisted by a return to somewhat more rational budgetary processes. Be sure to read the January edition of Guidelines for expanded analysis of these factors. Guidelines in our twice-weekly commercial vehicle blog are available on our homepage. Thanks for watching, and I'll see you next month.